people are going to experience some form of rate shock. They might have done that last year, or they might be coming up to kind of product maturity this year. So you need to keep an eye on both lens, if you will. And I think what's really, really pleasing is that we saw a 40% increase in first-time buyer numbers.
What would you put that down to?
So I think
I'm committed to helping you and answering all of your property-related questions. There's always a huge amount to cover, but at Move IQ, we really are committed to supporting you through that journey. But I'd be really grateful if you do find the content useful and valuable, then please do hit the subscribe button, become part of our community, and we'll continue to deliver. Meanwhile, let's get on with the interview. Charlotte, very warm welcome. Thank you for coming on the pod.
Thank you very much for having me.
Really good, really grateful that you've come. Now, Skipton, the fourth largest building society and over 1 million customers. This is a very substantial business. I actually have a Skipton mortgage. I should just get that out there to start with. You've got a lot of lenders. You've got a lot of buyers that you're supporting. How are you going about it? How is business?
So business is good despite some of the challenges in the interest rate environment. I think what's interesting for Skipton is we are a lender, so we're a financial service provider, but we also sit within Skipton Group, and that houses the UK's largest estate agency through Connell's Group. So we have a lot of insight in terms of the market for kind of almost like real-time transactions and what's going on with people in terms of instructions, viewing. So you get almost a feel for the market sentiment. Before
all the data and the house indices and all of that come out.
Yeah, because there's a bit of a lag with that. So I think in terms of where we're at the moment, I would say green shoots, so signs of positivity. I think the rates that have kind of stabilised over the last few weeks, buyers are probably in a bit more of a position where they're thinking they might be ready to commit. We're definitely seeing a more positive start to the year than we saw last year, certainly.
Yeah. I mean, life goes on, doesn't it? There are challenges out there.
Yes.
How have you been responding to interest rate rises?
I think continual repricing. We've been keeping a real close watch on the market. I think when I think about there's almost two camps of how you support people and the markets that you've got to keep an eye on. So how do you remain appealing and making sure that you're kind of open for business, if you will, for new customers, and so that we can continue to provide a really competitive range of products, and that's why we're continually repricing all the time. And then there's the second camp, which is how do you support customers that are already have taken loans with you? So how do we support yourself? Yes. Where people are going to experience some form of rate shock. They might have done that last year, or they might be coming up to kind of product maturity this year. So you need to keep an eye on both lens, if you will, in terms of making sure that we're helping our existing customers as well.
There's often talk in the press about the numbers of people coming to their rate end, and that it's going to be a massive shock. And of course, it's going to be a financial shock to those people involved, absolutely. But are there enough people facing that shock for it to affect the whole market at any one time? I feel not.
Well, so whenever anybody's taken a mortgage out in the first place, we don't check that can you afford that exact amount, and if you can afford that, then that's fine. We do some stress testing, so we make sure that if there is interest rate movement, that there is that kind of buffer that people can afford. So I think that's why we've not seen, which is positive, that we've not seen kind of material levels of kind of financial distress in the market, because we have been stress testing people.
So you can stress test them on interest rate rises, but of course we've also got inflation, cost of living.
We have.
Have you stress tested for those?
So we will look at we look at inflation when we look at our affordability assessments, but I think that's the unknown, isn't it? So how much of lifestyle and circumstances change from when you originally took out your mortgage, and that's life circumstances. People might have had children, and life happens. So you've always got to kind of be alive to that in terms of what can happen in the mortgage book, in the mortgage portfolio.
But in the same vein, as you said, you're open for business. That is your business. You want to lend money.
Yes.
You want to help people.
Yeah, absolutely. And we are doing. I think we've just come through a period where we've released our annual reports and accounts, and we've seen the kind of lending that we had last year, and it was a phenomenal year for us. And I think what's really, really pleasing is that we saw a 40% increase in first-time buyer numbers. It is a resilient market, despite everything that you hear that's going on around us.
What would you put that down to? A 40% increase in first-time buyers?
Yes. So I think...
Your products?
Well, obviously, I'm blue to say that. Of course, our products.
It's all right, I'll say it for you.
Thanks. I think if your ambition and your desire is there to get onto the property ladder, it's not about a financial product, is it? It's about a lifestyle choice. So as long as you can afford it, the appetite and the desire and the demand remains. We also saw, though, that rents have been increasing. So if rents have increased 10%, I think, roughly year on year, and people have been more alive to that, I think that's also compounded the desire for people that want to kind of take action and move. So
they want the security of their own home, and actually, if the rent that they're paying has now increased to such an extent, it's cheaper for them to get a mortgage.
Yeah.
Which brings us neatly, Charlotte, onto the topic of 99% mortgages, which has been in the press recently.
It has.
It's being expected in the budget. There's a lot of chat about it. Where are Skipton on that topic?
So, as you may well know, we have not only a 99% mortgage, we have a 100% mortgage. I think my view on this is anything that can help people and create another solution in the market to help people get onto the property ladder, if that's what their ambitions are, is welcome. And even when we launched the track record mortgage last year, whilst it might not have been the right thing for everybody, it created awareness that there might be solutions in the market that people have been unaware of, and that there is an opportunity to kind of discuss your financial circumstances and see if you want to get onto the property ladder. So do I think that that's going to solve the issue? No, because it's not that simple. But I do welcome more innovation into the market. I also know, I can see that there are potential downsides.
Yeah, there's two camps of opinion, isn't there? I mean,
yes.
This is 2008. We had warnings from the past when people had too much debt.
Yes.
And that led us into the problem. So
if lenders are going to adopt this, how can you ensure that you're protecting yourself as kind of from a business perspective, but it's really important that you are really helping people, because what you don't want to do is put them into an unaffordable home that they can't maintain payments on, that something goes wrong and all of a sudden they're not in a good position. So the intent has to be, and the desire has to be, that this is the right thing for customers, this is the right thing for a borrower.
It's a really delicate topic.
Yes.
Well, it's a delicate thing to get right from your perspective as a lender, because you want to lend money. You don't want to lend money in circumstances where it isn't right for the borrower.
Yeah, and that's not right for them. So I think, it is a delicate balance, and that's why for me, I don't think these are ever going to be mass mainstream market products, because it has to be tailored and it has to be right for both parties.
Are your competitors following suit? Or do you think they will?
That being said, we've been in a higher interest rate environment. People have probably been watching to see what happens with, their existing customer base. Whether or not, if we come into a bit more benign environment, we see more of that opening up remains to be seen. But
can you talk to us? Our listeners, our audience will be interested in the fact that you take into account the rent when you're establishing their affordability. Can you just talk us through that?
Yeah, so we conducted some research to say, if we want to help more first-time buyers get onto the property ladder, what are some of the key barriers and blockers to entry? And we always know that deposit and affordability always come out as key talking topics. And one of the key challenges, I think, that we saw was of people that do rent, over half of them didn't ever think they were going to be able to get onto the property ladder, despite the fact that their rent was matching what could be, or was even more expensive than what the mortgage might have been. And then we've seen it, everywhere in terms of social media, etc., in terms of why, if I can pay my rent and I can demonstrate that I can afford it, why can't I have a mortgage? Why is the deposit so much of the important crux of it? And so that gave us comfort in that we can assess affordability, we can go with no deposit, but we can do that because we know that you've got a proven track record, similar style household, so your bills should be similar. If you've been paying your rent on time every month, well, why wouldn't we want to help you?
It's something that should have been happening for years.
Yeah.
So it's great that you're doing it. It really is. Something else that's often in the press, building safety issues, cladding and the like. There's a lot of people affected by that at the moment.
Yes.
And the way ahead seems unclear. Where does Skipton stand on lending to people in that situation?
So we've just signed up to later standards in terms of lending on properties with cladding, where we know there's some remediation required, but we've got kind of the protection in the background. And I think, and that's quite recent, so that was in December last year. I think the point on here is, and it goes back to the kind of responsible lending again, which is lenders don't want to take on loans or provide borrowers with debt if we deem that there's going to be something that comes out of the woodwork that means it becomes more unaffordable. But at the same time, these people, we're years on since, Grenfell tragedy, and people are stuck in flats and with cladding and almost can't, there's no option out for them. So we have to do something as an industry to make sure that people have options where they can explore and move. And also, some of these properties are really, really attractive for first-time buyers. Yeah. So you want to free up that stock rather than it being sat there, not able to be sold.
Mm. Are you helping people? I mean, any idea how many people you've helped in those kind of affected properties? Putting you on the spot here.
I know you are putting me on the spot, and the answer is I don't have it to hand. Okay. But I think it's really early days still yet. But we will. I know we will be helping people.
You've heard it here first.
Yes.
Charlotte says Skipton will help. External impacts, because there's a lot of those on the mortgage market and the remortgage market. We've got inflation, interest rates, election coming up, obviously.
Yes.
Employment levels. We've got international conflicts. It's a really sensitive time out there.
Yeah.
What's your view on how all of those things will kind of play out or impact your lending or ability or keenness? Or
get the crystal ball and start to gauge.
Tough one.
It is tough, and I think the combination is there is no certainty, is there? And so that's why we've seen
there's never certainty, but it just feels like there's an increased level of uncertainty.
Yes. I think that's what we've seen play out in terms of the volatility in the market. So we've seen the impact of Ukraine-Russia war impacting in terms of inflation and therefore what it means in terms of driving interest rates up. So there is still a level of uncertainty, although we have seen a bit more of a stable kind of December, January, February few weeks. So we are seeing more stability. I'm not saying that continues.
Yeah.
But I think the key thing really is just being alive to it. So from a borrower's perspective, if you know that, if you quite happily sat on a fixed rate mortgage and you're not due to mature anytime soon, just carry on with life and don't worry. I think for people that are looking to buy, looking to take on new debt, or people that are going to mature off fixed rates or variable rate products, there's going to be some movement in terms of financials. Start stress testing yourself, because that's where you can always be forearmed and kind of front running the knowledge of what might it mean. I mean, so many calculators in there online in terms of just what if interest rates are this, what does it mean for me if it's X, Y, and Z. And then from a lender's perspective, we're just alive to that in terms of continually reassessing our product rates and our range, and then thinking, well, okay, what other solutions are there in the market that could help people?
It's fast moving.
It's very, very fast moving. Very fast moving.
Keeps you on your toes.
Yes.
The days of ultra low rates are gone, and probably rightly so. I always felt they were kind of held artificially low, and we went a bit bonkers. Any insight in what's to come, though, in terms of interest rates? And
I think the market's probably expecting some form of rate cuts this year. It keeps changing its mind on how much buy.
But you're alive to it, of course.
But of course, very alive to it. So I think there's an expectation of some cuts to base rate. I think what's important for people to be aware of, that doesn't always, from a fixed rate perspective, transpire through into the equivalent reduction just because of the way mortgage pricing works. But I think there's probably some tempering down of rates expected over the kind of next 12 to 18 months. But I agree with you. I don't think we're going to go back into an ultra low rate environment. So if people are expecting to start seeing rates beginning with ones, not in my opinion.
Well, can you just give me a sort of sense of where Skipton's rates are?
At the moment. So depending on kind of where your buying power is with equity and to debt, it's probably around 4.5% up to 5.5%. So.
And have you any idea what if you looked into history, what would an average interest rate be? Why do you think
How far back in history?
50 years?
50 years? Oh, no, I wouldn't.
25 years?
25 years. And
Ballpark. I'm not going to hold you to it.
I'm going to say 10%. 8%.
As an average interest rate?
Maybe, I don't know.
So, I mean, you've kind of answered my theory. My theory is that actually we're fine.
Yeah.
It's just we're not very used to it. And 4.5% suddenly feels really uncomfortable.
Well,
but actually, if you look into history...
But I would say... I can see that argument, but I would also say what's the average house prices over that tenure as well. I think there's a comfort level around where rates might go, and I think at the point that you go in today's market much beyond 5.5%, 6%, I think it becomes a lot more challenging for people, because what were house prices 25 years ago, and then they're certainly not what they are today. So actually, when you think about you're pegging your interest rate but you're pegging that against a much bigger balance in terms of debt.
Yes.
Your financial payments are hefty.
Yes.
So I think there's a bit of a balance, and I do think I see the sentiment that we're not seeing, rates don't have to be 2% for it to be affordable.
We've just got to get used to the idea.
Yeah.
Charlotte, really, really grateful. Fantastic to talk to you. Keep doing what you're doing.
Thank you very much.